Imagine stepping into a bustling real estate office. You're in one of the world's most, luxurious and dynamic cities, and you're not pulling out stacks of cash or messing with complex international wire transfers. No, you're confidently completing a multi-million dollar villa purchase using, say, Bitcoin or Ether. It sounds like something straight out of a movie, right? A near future sci-fi thing. But here's the amazing part. This isn't science fiction. It's happening right now. It's actively reshaping global property markets as we speak. So today, this deep dive is all about Dubai, crypto real estate unlocked. We're exploring how this really ambitious city is fast becoming, a global leader in property deals using digital assets.
Exactly. And our mission today is pretty clear. We're going to carefully go through the sources you've provided. We'll cut through the jargon, the complexity, all of that to give you a really clear picture of how this whole system works. We'll look at the legal side, the safety frameworks behind these deals. We'll talk about the key players, the regulators, the developers who are making it happen. We'll unpack the advantages, which are sometimes quite surprising, actually. And yeah, take a look at what the future might hold for this rapidly changing market. Basically, we want to give you the essential information, the real nuggets, so you're properly informed without getting overwhelmed.
Right. And just to give you a sense of the scale here, check this out. Did you know that back in early 2025, something like 3% of all off-plan real estate deals in Dubai were paid for using crypto? And for anyone maybe not deep in real estate talk, off-plan just means buying it directly from the developer before the building's finished. Often you pay in stages as it gets built. It's pretty flexible. So that 3%, that's not just a few test cases, that's a real chunk of the market. And apparently, it's largely being driven by foreign investors finding this method super convenient. So let's really get into this. Dubai, crypto, real estate, it just sounds like this perfect storm of innovation, doesn't it? A city known for thinking big, now embracing the absolute cutting edge of finance.
What's really striking is how quickly Dubai moved on this. Yeah. They went from just an idea, a concept, to a fully working operational market. Very deliberately, it seems. This isn't just some small experiment on the side. It's a real functioning ecosystem. And, this level of adoption, this regulatory integration, especially in such a high-value sector like real estate, well, you don't see that in many other places globally. It really says a lot about their clear long-term strategy. They want to be at the forefront of the digital economy.
Absolutely. It's not just like a slick marketing ploy or some academic discussion. When we talk about Dubai becoming this crypto real estate hub, we're talking solid, real progress. Dubai, as most people know, already had this reputation, right? A major global hub for crypto adoption in general. But we're not just talking about crypto ATMs everywhere or buying coffee with digital coins. We're talking huge, high-value assets. Things like real estate, which is traditionally quite conservative. Just think about that for a second. A few years back, the idea of buying a luxury apartment, let alone a villa, with Bitcoin, unthinkable in most property markets, yet here we are.
Precisely. And the adoption isn't just limited to property, it's broader than that, which really shows their commitment. You've got major international names like Emirates Airline accepting crypto payments. You can buy flights via crypto.com. When you see this kind of acceptance across different industries, big ticket real estate, everyday travel it makes using digital assets feel, well, more normal, more secure. That helps lower the barriers for people maybe new to crypto and builds that broader public trust.
And crucially, the Dubai Land Department, the DLD, that's the main government body for all real estate stuff, registration, transactions, they've really backed this. They haven't just sat back and watched. They've actively opened doors for things like property tokenization, which, yeah, we should definitely talk more about later, and made it easier to do direct deals using the big cryptos. Bitcoin, Ether, stablecoins, this isn't just allowing it. It feels like active support from a key government department.
That proactive approach from the DLD is absolutely key. It's a major differentiator. Because they're thinking ahead, it makes buying a home in Dubai with crypto not just, technically possible, but actually practical, accessible. It takes it from being maybe a fringe thing to a legitimate, secure, and pretty straightforward option. And that clear signal from the government saying, yes, we support this tech shift, that's huge for bringing in both the big developers and international buyers. It gives them that regulatory certainty they really need.
So if we boil down the key points from our sources, it's crystal clear. Dubai hasn't just welcomed crypto. They've actually written clear laws for buying property with it. The whole thing is carefully regulated by VARA, the Virtual Assets Regulatory Authority, and operates under the UAE Central Bank's framework. So it's not some legal gray zone, not the Wild West you might associate with early crypto days. It's a properly defined, legally solid system designed to build confidence.
Indeed. And what's really telling is who's involved. It's not just small startups or speculators. The real giants of Dubai real estate, massive, reputable developers like Damac Properties, like Emar, they're openly accepting Bitcoin, Ether, stablecoins for property sales routinely. This isn't some small pilot scheme, it's baked into how they do business now, which shows a real belief in the viability and probably the growing demand for these payment methods.
And for the buyers, especially if you're coming from overseas, the advantages seem really compelling. Crypto payments offer this kind of triple threat, right? Speed, cost savings, and just ease of transaction. That last one must be huge for global buyers who might otherwise face a maze of international banking rules and delays.
Oh, absolutely. And what's really interesting is how stable coins, the crypto is pegged to things like the US dollar to keep the price steady. And this whole idea of tokenizing real estate, they're not just seen as convenient, they're viewed as actual engines for Dubai's next property boom. Think about it from an international investor's perspective. You're juggling currencies, worrying about exchange rates maybe. Using something like USDT, the dollar-pegged stablecoin, just cuts through that problem. You can effectively lock in the price of your villa in dollars, hedging against currency swings that could add huge, unpredictable costs to a multi-million-dollar deal. That predictability, that transparency, it's a huge draw for global money. Makes Dubai look very stable, very attractive compared to maybe less clear markets.
Okay, this is where it gets really interesting, I think, and it's key to understanding why Dubai is succeeding here. It's not just a couple of developers deciding to try it out. We're talking major players operating within a clear, established legal path. But just how clear, how strong is that path? What makes this regulatory setup so solid that these huge, normally quite conservative developers are putting their names and billions in projects behind it?
That is the fundamental question, isn't it? Any serious investor would ask. What's the real regulatory muscle here? What oversight is in place to make sure this isn't just, a free-for-all, but a genuinely secure, transparent, legally sound process? Because without that clarity, without that strong oversight, the risks for investors, especially international ones moving large sums, would just be too high for this kind of broad adoption. It's precisely this regulatory clarity and the whole framework around it that's creating the confidence we're seeing.
That's a great point, and digging into that regulatory muscle is exactly what we need to do next. Because, as our sources show, Dubai's crypto real estate market operates in what's probably one of the world's most defined, sophisticated regulatory environments for digital assets right now. This wasn't just thrown together, it's a deliberately designed system layered, built to create and maintain investor trust.
Precisely. And right at the core of it is VARA, the Virtual Assets Regulatory Authority. Established back in March 2022, VARA plays a vital role. It's the main independent regulator for virtual assets in Dubai, though importantly not in the DIFC, the Financial Free Zone, which has its own setup. VARA's job is huge. It oversees exchanges, custodians, brokers, service providers, basically the whole ecosystem, making sure things are run properly and consumers are protected. Crucially, VARA issues licenses to the big players' names like Binance, Nomura's Laser Digital. This licensing framework is what enables those safe, legal crypto-to-property deals. And, very importantly, it specifically supports the legal, regulated conversion of crypto like Bitcoin or Ether into UAE dirhams. Without VARA's oversight, the whole thing would be much riskier, much more ambiguous legally.
Okay, so VRA is like the main supervisor, the gatekeeper, making sure the crypto site is legitimate and the conversions happen legally. But you mentioned layers. It doesn't stop there, right? There's a federal level component too.
Correct. At the federal level, covering the entire UAE, you have the Central Bank, the CBUAE. They enforce the Payment Token Services Regulation. And this is quite specific. It dictates that only entities licensed by the CBUAE can handle conversions involving the UAE dirham or any foreign-backed stablecoins. This keeps the money flow, even if it starts as crypto, firmly within the supervised traditional financial system. Helps prevent illicit stuff, ensures financial stability.
And there is a point coming up that's absolutely critical for anyone thinking about using stablecoins for property in Dubai, a really important deadline.
Yes, this is huge. Cannot stress this enough. After the August 2025 compliance deadline hits, all property deals involving stablecoins, no exceptions, have to go through rigorous Know Your Customer, KYC, and detailed source of funds checks. These aren't optional. They're mandatory legal requirements. They're designed to meet top international anti-money laundering AML standards. It's a major signal of a maturing market that puts financial integrity first. It means, quite simply, no more anonymous stablecoin property deals after that date. Every digital dirham equivalent needs a clear, traceable origin.
Wow, okay, that's a massive assurance for buyers, knowing the money's origin is being checked so thoroughly. And then there's the final piece, the one that ties the digital deal back to the actual physical property and its traditional legal ownership.
Exactly. The
Yeah.
Dubai Land Department, the DLD, as the ultimate authority for property registration, they have a non-negotiable rule. Their mandate is absolutely clear. All property deeds, all titles must be finalized and officially registered in UAE dirhams, AED. So what that means practically is, even if you pay for your fancy Dubai villa using Bitcoin or Ether or USDT, those digital funds have to be converted into AED through one of those VAA or CBUA-approved licensed channels before the DLD will register the property in your name. This makes sure the official public record, the legally binding ownership document, is tied to the national currency. That gives it stability, legal certainty, and it plugs seamlessly into the established property system.
So, putting it all together for someone looking to invest, what it really means is they've genuinely thought this through from every angle. It's not just a free-for-all, not some loophole. It's this really robust, multi-layered system. You've got VA watching the crypto service
Right.
providers.
Ensuring they're legit,
You've got the central bank regulating the fiat conversion.
maintaining financial stability.
And then the DLD locks it all down with the final registration in AED.
It's intentional, a system designed for trust and security. And if you look at the bigger picture, it really shows Dubai's strategy. Attract global capital, attract innovative wealth, yes, but do it while rigorously maintaining financial integrity. It tackles head-on those concerns people often have about crypto money laundering risks, lack of transparency, you name it. By building this secure, compliant framework, Dubai isn't just trying to be a crypto hub. It seems they're aiming to be the most trustworthy crypto wealth destination. It's a calculated move to use financial innovation safely for economic growth.
That makes a lot of sense. Building that trust is absolutely vital for attracting serious long-term investment. Okay, let's shift gears a bit. Let's talk about who's actually doing this on the ground. Who are the players making these deals happen, and what specific cryptos are actually being used for these big purchases? Because, having a great regulatory framework is one thing, but you need the market to actually use it.
Exactly. And what's quite amazing, really shows how widespread this is that if you walk into pretty much any decent real estate brokerage in Dubai today, they're not just vaguely aware of crypto, they're genuinely fluent in crypto.
Hmm.
It's becoming standard. You don't have to hunt for some niche specialist. It's increasingly just part of the normal service offering, that widespread fluency. It's a huge indicator of how mainstream crypto has become in Dubai's property market.
That's a massive change from just a few years back. It means you're not wasting time explaining Bitcoin basics to your agent. You're getting straight into the deal specifics. And it's not just the agents who are ready, right? The biggest developers are really leading the way.
Oh, absolutely. The top developers, the ones building Dubai's iconic skyline, they're actively using crypto payments in their standard sales processes. Think about Damac Properties, huge in luxury real estate. They routinely accept Bitcoin, Ether, stablecoins for their high-end off-plan projects. Emar, the developer behind the Burj Khalifa, you can't get much bigger. They also accept digital assets on certain prestigious developments. That sends a powerful message. And Nakheel, famous for the Palm Jumeirah, they support crypto for sales, even rentals, through partners like Haven. So it shows this deep, wide acceptance by the market's most established, influential players. It really legitimizes crypto real estate for everyone.
So it's really embedded from the agent you meet first, right up to the companies building the skyscrapers. And beyond the developers, there's a whole digital infrastructure supporting these deals, too.
Yes, the ecosystem is quite sophisticated now. Brokerages often do more than just connect buyers and sellers. They frequently handle the conversion of crypto to AED for their clients, navigating those regulatory steps behind the scenes, which simplifies things massively for the buyer. And beyond that, the DLD itself is collaborating with major crypto players like Crypto.com, Prepco. They're actively building an even more advanced ecosystem. This includes plans for property tokenization in 2025, enabling fractional ownership, and making crypto to AED payments even smoother and more compliant. It's not static. It's constantly evolving, getting better, more efficient, more secure.
It really paints a picture of a functional, mature landscape right now in 2025 for buying UAE property with crypto. You've got developers, payment processors, regulators, all aligned on a secure, legal, and increasingly smooth process. This isn't some future dream. It's basically here.
Indeed. And the institutional buy-in goes beyond just the DLD. Did you know Dubai's big free zones, like DIFC and ADGM, they've rolled out their own detailed crypto frameworks? including the crypto token regime, which officially recognized stablecoins like USDC and EURC by the Dubai Financial Services Authority early in 2025. This shows a broader, deeper institutional acceptance across different financial bodies in the UAE, a real long-term commitment.
That's a serious endorsement, much wider than just real estate. Okay, let's get down to specifics. If you're buying that Dubai villa, which cryptos can you actually use? Is it anything goes, or are there preferences?
Well, the most widely accepted, the ones used most often for property deals, are predictably Bitcoin, BTC, and Ether. Developers really favor these two, especially for the big-ticket transactions. Deals in Ether, in particular, seem quite common for luxury projects. It's probably down to their market presence, their liquidity. Global recognition makes converting large amounts easier and more reliable.
And what about the stable coins? The ones designed to bridge the gap, offer price stability.
Yes, stablecoins like Tether's USDT and also USDC are key players too. They offer that vital price stability, which is incredibly important when you're talking about millions of dollars changing hands for property. They help buyers lock in value without worrying about those wild price swings you can get with Bitcoin or Ether. It takes away that immediate risk of the market moving against you between agreeing the price and finalizing the deal.
So it's not quite a free-for-all on coins. There's a definite preference for established, liquid, and stable options.
Exactly. But, and this is important, buyers do need to check the specifics. Acceptance terms can vary a bit between developers or even specific projects. Some might limit which tokens they accept or maybe require part of the payment in AED anyway. So it's really essential to do your homework upfront. Confirm with the developer or agent early on. Which coins are okay? Are there any partial AED payment rules? Do I need to handle the conversion myself? Getting that clear at the start avoids major headaches later.
It really does sound like you're no longer just hoping to find a developer who might take crypto. It feels like it's rapidly becoming a standard choice, a standard option across the board. That's a huge change from just a couple of years ago when it would have been a very rare, bespoke thing.
Exactly. It's not a niche offering anymore. It's integrated. It's part of the normal sales process for the biggest players in Dubai real estate. And that speaks volumes, really, about their confidence in the regulations, yes, but also in the market demand for these payment options. It means the infrastructure is mature enough now to handle these high-value deals securely, legally, and efficiently.
Okay, so if you're listening and thinking, right, this sounds really promising, but how do I actually do it? What are the steps? Let's break down that step-by-step guide to buying property with crypto in Dubai. It seems pretty streamlined, but you definitely need to navigate it carefully.
That's right. The process is designed to be clear, transparent, actionable. It tries to balance using these innovative payment methods with that absolute need for regulatory certainty and legal force. Gives the buyer a clear roadmap.
Step 1 seems absolutely critical and maybe easy to overlook. Choose a real estate agent who actually gets crypto. You really don't want to be explaining blockchain basics during a multi-million-dollar negotiation, right?
Exactly. It's not just a nice to have, it's foundational for a smooth deal. You need to work with agencies that specialize in this, who know how to structure contracts for legal crypto payments in the UAE. Firms like Engel and Volker's Dubai, Crypto Dubai, properties they have that specific expertise. Provident Estate is another known for handling luxury sales for crypto investors. The good news is the market's matured, so there are plenty of knowledgeable agents now. Finding one who understands crypto deals and compliance isn't hard. They're your essential guide here.
Okay, got the specialist agent. Next up is naturally the contract negotiation.
Step 2. Nail down the contract details. This is legally vital. You have to make sure the purchase agreement clearly states that while payment might start in Bitcoin, Ether, or stablecoins, it will be converted into UAE dirhams at some point before the final registration. That clause is critical. It protects everyone legally and aligns the deal with the DLD's requirement for registration in AED. It's that legal bridge between the digital asset and the traditional system.
Right. And then comes the actual conversion of the crypto into dirhams.
That's step 3. Convert crypto to AED. And you must use licensed, regulated providers for this. Names like Rain, Binance UAE, or other approved crypto escrow services operating in Dubai. Using licensed providers isn't optional. It's legally required to ensure the whole deal is compliant and secure under UAE rules. And many of these licensed payment processors now offer really helpful features for property deals. Things like guaranteed exchange rates, locking in a rate to avoid volatility risk, instant fiat conversion to minimize market exposure, and built-in compliance tools that help with the KYC and AML checks. These genuinely make the process simpler for buyers using crypto for property or even mortgages in the UAE.
That sounds incredibly useful, taking a lot of potential complexity out of it. But even with licensed providers helping convert, there's that big compliance hurdle protecting everyone and the system's integrity.
Absolutely critical point. Step 4 is completing those compliance checks thoroughly. You need to be ready for full no noche, know your customer, KYC, providing detailed source of funds documents, and maybe even on-chain wallet verification. These are legal must-dos under UAE law, especially with that August 2025 stablecoin deadline approaching. For anyone unsure, on-chain wallet verification often means the licensed provider traces the history of your funds on the blockchain, where they came from, how they moved to ensure they're legitimate. Transparency here is everything. Be upfront, provide complete records, show a clear, verifiable wallet history. That makes the process smooth. It's how you prove your funds are clean.
And finally, the big moment, becoming the official legal owner.
Step 5. Register the sale. This is the final step with the Dubai Land Department, getting that title deed finalized. And it's vital to remember, even though you paid with crypto, all the official documents, the title deed, the sale agreement, will show the transaction value and ownership in UAE dirhams, AED. That's crucial for legal enforceability within the UAE system and also for things like getting a mortgage later or selling through traditional routes. This whole structured process manages to balance the cool innovation of crypto payments with that absolute need for regulatory certainty. It makes buying a house with Bitcoin legally and securely a real thing in Dubai, provides that clear, safe path for buyers.
So it's definitely not the Wild West. It's a structured legal process that really removes a lot of the uncertainty and maybe anxiety, doesn't it? Makes it feel much less daunting for someone maybe new to using crypto for such a massive purchase. It changes the whole risk feel.
Absolutely. This systematic approach really demystifies what could seem like a super complex transaction. It gives buyers that clear roadmap, builds confidence. It's all about creating security and clarity, which are just paramount when you're dealing with high-value assets like prime real estate. And that careful strategy is exactly how Dubai keeps its market not just innovative, but also reputable and attractive to serious global investors.
Okay, let's switch focus now to the why. Why would someone, especially an international investor, actively choose crypto for a Dubai property deal when traditional options exist? What are the real tangible benefits driving this trend and getting so much attention?
Well, the first one, and maybe the most immediate, is just sheer speed and efficiency. Think about traditional international wires for large sums. They can take days, maybe even a week, right? Multiple banks, time zones, crypto payments, depending on the network load, usually settle in minutes or maybe a few hours at most. And the licensed providers, like crypto processing by Coinspade, they handle the conversion and settlement almost instantly. No delays. That speed is huge in a competitive market like Dubai's, where grabbing a good deal quickly can make all the difference.
That's a massive time saving, especially for international buyers dealing with different banking systems, which leads right into the next big advantage: global accessibility.
Indeed. Digital assets basically sidestep a lot of those traditional currency controls, capital restrictions, and complex international banking hurdles. That's a game changer. It gives overseas investors direct, easier access to Dubai real estate, no matter where their money is based or what their local banking rules might be. It really opens up the market to a much wider global audience.
And what about the cost? Sending millions internationally the old way can rack up some serious fees.
That's another really significant benefit: lower transaction costs. Much lower, often. Traditional international wires can cost anywhere from 2% to maybe even 5% of the total value. Crypto transactions work differently. Fees are typically closer to 1%, often less, depending on the network and provider. Now, when you're talking about property deals worth millions or tens of millions of dirhams, that difference in fees can mean saving serious money, 6 figures, easily, makes the deal much more economical.
And lastly, there's a benefit that's maybe less flashy, but super important for secure transactions.
That's the transparency and traceability built into the blockchain. The ledger records every transaction immutably. It creates this permanent, auditable trail. That transparency is great for regulators checking compliance, but it's also good for the buyers themselves. They can verify everything independently. It acts as a strong safeguard, makes fraud harder, disputes less likely, builds trust. So you add it all up: speed, global access, lower cost, transparency, and you see why crypto is becoming so practical, even preferred. Especially for luxury property, for international buyers wanting faster, cheaper, verifiable ways to move money. And there's a really interesting stat about who's driving this among the wealthiest investors.
Yes, it's fascinating. Did you know that in 2025, around 30%, a third of Dubai's ultra-high net worth individuals, UHNWIs, the ones with over $30 million in investable assets, held crypto assets. That high adoption rate among such sophisticated investors is directly fueling demand for crypto-friendly property deals. It shows it's not just a fringe thing, it's attracting serious, established investors who see the efficiency and advantages crypto offers for big deals. That signals real institutional-level confidence.
Lower costs, faster transfers, global reach, transparency. Wow, it really does sound like the dream scenario for investors looking at Dubai. But, every dream has its potential pitfalls, right? What are the risks involved in this new world of crypto real estate, and how does Dubai's setup help manage them?
Indeed. The advantages are compelling, no doubt, often dramatic. But it is absolutely vital for any buyer to be fully aware of and actively manage the risks that still exist with any crypto transaction. Despite all the progress Dubai has made, buying property there with crypto still involves specific risks. You need to manage them carefully, prudently, to ensure a secure outcome.
Okay, let's start with the most obvious one, the one everyone talks about with crypto, volatility.
Absolutely. Crypto volatility is still a major factor. Assets like Bitcoin, Ether, they're known for big, fast price swings, sometimes within hours or even minutes. That volatility can directly change the final effective cost of the property for the buyer between when they agree the price and when the deal actually settles. On a multi-million-dollar property, even a small percentage swing is a lot of money.
That's a big risk to take on. So how can a buyer protect themselves against that kind of price swing?
Well, there are good ways to mitigate it. Buyers can significantly reduce that risk by using stablecoins, like USDT, which we talked about. They're pegged to fiat, so much less volatile. Another common, very effective method is to fix the exchange rate in the sales contract itself. You agree with the developer or payment processor on a specific rate when you sign the deal. That locks in the price in AED no matter what the crypto price does afterwards. Gives the buyer crucial financial protection and certainty.
Okay, so volatility can be managed. What about the rules themselves? Dubai's framework is strong, but could it change?
Regulatory flux is another risk factor, yes. Dubai's crypto rules are well-defined now, but they're still quite new compared to traditional finance rules. And they are evolving, responding to the market and global standards. Future changes to property crypto laws could affect payments, settlement, maybe even tax rules down the line. So buyers really need to stay on top of updates from VAR from the central bank. Staying informed isn't just advice, it's a key ongoing strategy. Having that specialist agent helps keep you updated too.
And then there are risks tied to the actual platforms, the infrastructure you're using for these big deals.
This is a really important one, often where things can go wrong if you're not careful. Platform and infrastructure risks are real. Things like operational glitches, security breaches, even a service provider going bust. The way to mitigate this is simple, but vital. Only work with licensed, regulated providers, like RAIN, crypto processing by CoinSpade, the ones under government oversight. Using unregulated services massively increases your risk of fraud, theft, insolvency. It completely undermines the protections the UAE's framework is designed to give you. Stick to the licensed players.
And finally, a risk that applies to any large financial deal, crypto or not, legal checks, especially around anti-money laundering.
Yes. AML and general legal scrutiny are huge. Transparency is non-negotiable here. If your fund sources are unclear, if you try to hide who really owns the money, use complex shell companies. Regulators will investigate heavily. To avoid this, you need impeccable KYC records, verifiable on-chain wallet histories. And you absolutely must use regulated escrow services offered in Dubai. Transparency is your best defense. Provide everything upfront, clearly, truthfully. Prove your funds and intentions are legitimate.
So it really comes down to being smart, careful, proactive, not just getting swept up in the excitement of the tech. It sounds like the tools and the framework are there, but the buyer has a really active role to play in keeping the transaction secure.
Precisely. The regulations are there to protect the investor, create a safe environment. But you, the buyer, have a responsibility to use that framework correctly. Use the compliant channels, the licensed providers. If you take the right precautions, do your due diligence, follow the process, then yes, crypto property deals can absolutely be done securely and legally in Dubai.
Okay, this is where it gets really, really exciting, I think. Beyond just using crypto to pay, Dubai isn't just stopping there and making payments convenient. They're looking much further ahead. They're actively building towards a fully digital property market where ownership itself, how you transact, is transformed. It's incredibly ambitious.
That's absolutely right. The first huge trend here is property tokenization,
It's gaining real momentum. This basically allows for fractional ownership of real estate. So instead of needing millions to buy a whole villa, you can buy a digital token representing a small share of that property's ownership, all recorded on a blockchain.
That sounds a lot like buying shares in a company, but for a physical building. Do we have actual examples of this working?
We do, and they're pretty stunning. Platforms like Pripco Mint are already selling fractional shares of expensive villas as blockchain tokens. And the demand and the speed. It's amazing. There was one case, a 1.75 million AED property. It sold out completely in just 5 minutes to over 160 different buyers. That one example just highlights the huge demand, the incredible efficiency of this model, and crucially, it dramatically lowers the entry barrier for real estate investing, opens it up to way more people.
Wow. 5 minutes for nearly 2 million dirhams worth of property shares? That's incredible speed. And it's not just small experiments or individual investors testing the waters, is it? Big institutions are getting involved.
Not at all. Institutional adoption is speeding up incredibly quickly. A really key example, Damek Properties, a giant developer, has a $1 billion partnership with Mantra. That it's not just a press release, it signals a massive shift. It shows tokenized projects are moving from being niche things to mainstream investment opportunities. Serious institutional money is flowing in. It's a huge vote of confidence from traditional finance in the future of tokenized real estate.
Okay, so we've got widespread crypto payments, the game changer of tokenization, and growing institutional buy-in. What about tying all these pieces together into a smooth, integrated system for investors?
That's exactly where the idea of integrated ecosystems comes in. You're seeing these careful collaborations forming between key players like the DLD, Crypto.com, Preco. These partnerships aim to combine everything verifying identity, securely holding digital assets, streamlining settlement into joined-up systems. They're basically laying the groundwork for a fully regulated, super efficient digital marketplace for real estate, where every part of the deal is smooth, transparent, and compliant.
So looking ahead, what's the ultimate vision? What could the future of Dubai real estate look like because of all this?
Well, all these trends point towards a future where investors can not only buy Dubai property with crypto, but they can also trade tokenized property shares almost as easily as sending crypto between digital wallets. Think about the liquidity that unlocks, the accessibility, the efficiency. It could truly democratize real estate investment globally. But, and this is the crucial condition, this future ease depends entirely on all transactions happening through licensed regulated channels. That strong regulatory oversight we talked about. It remains the absolute foundation this future is built on.
This is genuinely exciting stuff. It's not just a new way to pay for a house. It's fundamentally changing how we think about owning property, trading it, almost like stocks on an exchange. The potential to make real estate way more liquid, more accessible, globally tradable. It's just enormous, potentially world-changing.
And if you connect that to the bigger economic picture, it suggests nothing short of a complete digital transformation of the global real estate market.
Yeah.
It has this huge potential to democratize access to high-value assets through fractional ownership, breaking down old barriers. It could really redefine traditional investment strategies, open up massive new opportunities for a much wider range of investors worldwide, fundamentally reshaping how wealth is held and moved in the 21st century.
So what does all this mean for you listening right now? It means the future of real estate. It isn't some far-off idea. It's here, happening now. It's vibrant, dynamic, and being powered by crypto right there in Dubai. We've walked through Dubai's really strong regulatory setup. We've got a clear picture of the secure process for buying with digital assets. We've highlighted those compelling advantages drawing in global money, and we've learned how to navigate the risks carefully. This isn't just speculation. It's real, it's current, it's transforming a huge industry. And hopefully you now feel really well informed about this cutting-edge topic.
And maybe it leaves us with a bigger question to think about. As digital assets keep redefining ownership, redefining exchange, how deeply will this reshape our basic understanding of traditional wealth, of asset ownership, of investment strategies going forward? And specifically, given Dubai's really bold, pioneering move into crypto real estate, what impact could this model have on other major property markets around the world? Could we genuinely see a future where property becomes increasingly liquid, digitally traded, truly borderless? It's definitely something interesting to consider as we watch this fascinating space continue to grow.